Welcome to the July 1st, 2019 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. Thank you for tuning in. I'm Spencer McGowan, President, McGowanGroup, and your financial weatherman. Be sure to subscribe for notifications when we have fast-breaking markets and important financial news. You'll get a special alert, plus 5 of the most educational minutes in finance that you can get anywhere. Dow, this week, what we're seeing here is 27,000 on the Dow, 22,000 on the Dow. We've covered this range-bound thesis since we first said it back here, meaning that there's a floor and a ceiling, at least for the time being. What could break through the ceiling? You can see this week's trading activity ahead of the Trump and Xi summit this weekend. I'll say at this point, before they meet, well, look, we could be 1,000 points up into new high territory or 1,000 points down based upon the institutions that have been trading every negative headline in the trade wars. And so that's a huge week ahead for U.S. equity prices and, of course, the Dow Jones Industrial Average. It's a decision point. Do we stay in the range or do we make a new high? We'll see how that shakes out this week. Hopefully Trump and Xi holding hands save the world as opposed to the battle that they've been in. Interest rates. $13 trillion actually traded negative yields as we speak. That is a global record. 1/4 of all government bonds have a negative yield. Wow, you pay money to have countries hold your money. So this is the 2-year treasury for different nations. And you could see you have to pay money to France, Germany, you have to pay money to Spain, and Portugal. Portugal, that's not a really good credit quality. You can come to the U.S., get 1 3/4%. It explains the compression in yields. And it also says, my gosh, what are the risks involved with negative yield bonds? It's called duration risk. Let's go a little further in duration. This is the 10-year grid. United States pays about 2%. And Canada only 1.5%, Brazil only 4.6%. Look at the negative yields across Europe, France, Germany. Of course, Switzerland was the first to go negative. What does that mean? Well, in that example, it's forced allocations. And Austria came out with a 100-year bond that just yields 1%. And you could lose a majority of your money if that rate went to 2%. That's called duration risk. So the inflation hawks have always said we got to do something about it. But first a bond solution, and then we're going to cover to some of the cryptocurrency headlines from this week. As we look at municipal bonds, notice this high point hit back here in 2011, 2012. Then we went right back to 100 par, now 115, now 113. Muni bonds are expensive relative to par value and a low yield, just 2%. Actually, net yield after you amortize the premium says you'd only make 1.5 in the short-term muni bond index. The U.S. Corporate High Yield Index still yields about 5. Seems like a fortune based on what we've been looking at. And it's only 87% of par by this measure. What does that mean? Well, discounts are a type of protection. The higher yield is a type of protection. So global high yield, which arguably is available cheaper with a better yield than that may be one of the best fixed income solutions for a portion of portfolios. You need a plan from McGowanGroup Asset Management. You can go to NetWorthRadio.com right now, fill out your preliminary client questionnaire for a fixed income strategy that may provide much better returns than the traditional fixed income allocations with low yield and duration risk. It's been said that you have to prepare for inflation. The Fed's profligate. It's going to be 1981 all over again. Rates will go to 20% on mortgages. It's going to be terrible. Well, we've been in that fear mode for the better part, coming up on 40 years. And if we look at what happened in Bitcoin, that's like an alternative currency. If dollars are going to be worthless, well, you'd rather have something besides dollars, right? And I'll show you the solution that we believe in on your inflation panic, if you will. We don't have inflation. We've got low inflation, but look at what happened here. So Bitcoin runs from almost nothing to 19,000. Plenty of headlines about all these multimillionaires that used to live in their parents' garage. And then we see Bitcoin going down to 3,000. Ow! Okay? It went from 19 to 3. How good of a store of value was that over this year? This goes from the end of 17 through 18 and now into 19. Bitcoin's back up. This week it had an exciting week. It's a hot summer for the cryptocurrency cult. Bitcoin goes from 10,000 to 14,000, back to 10, and then at about 12. That seems a little volatile if you want to use it as a safe store of cash. Here's gold over the same 3-year period. 1,439 at the peak. It spiked about $100 on the news of the Middle East conflicts. A lot of that buying was in Asia. But you don't get any yield, and the only variable potential advantage you have is price. Everybody else has to buy this stuff for the price to go up, and if they don't want it, price can go down regardless of inflation. What's one of the top components in inflation? It's energy. And the energy bear cycle essentially lasted from 2014 oil at 100 through 2016 oil at 27. This week, oil approaches $60 at the highs of the week. That's 59.58. And so what we see here, if we look at West Texas Intermediate crude versus the pipelines, well, pipelines are up 85% from their low. West Texas Intermediate crude up 127%, about a 40% appreciation potential if they catch up, which they tend to be correlated over long periods. These are the pipelines, the energy infrastructure. With the United States reaching energy independence this year, according to EIA charts, that says another 10 years potentially taking U.S. production to as much as 25 million barrels a day equivalent. And if that's true, it all has to flow through the pipelines with a dividend in many cases. That's one strategy for inflation that we use in our allocations, and it arguably is some potential appreciation plus the yield. Thank you for tuning in to YouTube McGowan Group. We'll be back next week with your weekly financial briefing. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.